Have we finally learned to stop worrying and love the managed care space? For months, the managed care stocks, think health insurance, have been hammered because Wall Street's terrified that Elizabeth Warren will win the Democratic nomination. Senator Warren wants to establish Medicare for all. It's a single-payer health care system that would potentially drive the entire managed care industry into oblivion. It's not just the more left-wing firebrands like Warren or Bernie Sanders. Most of the Democratic field wants to at least crack down on the private insurance industry, the managed care companies. Joe Biden is the only serious contender who's willing to go to bat for our current system. He's running on a mend it, don't end it platform that's probably pretty good for the managed care plays. But over the past few months, Joe Biden lost his status as the presumptive frontrunner. As Warren's polling went up, the managed care stocks plummeted. Believe me, I get it. We should absolutely pay less for these stocks in a world where the single payer is on the table, even if I think it's a lot less likely than the healthcare bears would have you believe. That's why UnitedHealth Group, the best of the breed, saw its stock fall from $268 in July to $212 just a few weeks ago. Cigna sank from 180s to the 140s over the same period. Anthem tumbled from 310 to the 230s. Investors sold first, and they asked questions later. Yep, the whole group has been in the doghouse, at least until yesterday. See, yesterday, as I mentioned at the top of the show, UnitedHealth reported a true blowout quarter. They gave you a reason to stop fretting about November 2020 and start focusing on all the money they can make right now. That's why the stock pulled at 8% yesterday. And you know what? It ain't done. I think it's got more upside. It had a little downturn today. At one point, it was down like here and came back. That's because it's got more upside. Why? Okay, going into the quarter, there was a widespread sense that UNH had a lot to contend with. For example, just last Thursday, Jefferies downgraded the stock based on worries about the broader managed care sector. I found the piece frightening. There's an Obamacare-related tax that will go back into effect next year. There's the political worries. And they were also fretting that the company's medical loss ratio might be going in the wrong direction. What is that? That's the percent of their premiums that pay out to cover the cost of insurance claims. Now, not everyone was negative here. I told you to buy UNH in late September when it pulled back to 215. That's exactly what we did for my charitable trust. Of course, you can follow along by joining the ActionAlertsPlus.com club. I thought the political risks were overblown, and the stock had finally gotten absurdly cheap. Too cheap to ignore. Sure enough, when UNH reported yesterday morning, they knocked it out of the park. This was a stunning quarter that proved the naysayers wrong. The company delivered a nice top and bottom line beat. Then management raised their full-year forecast for 2019, gave much better than feared guidance for 2020. Before wrapping up his prepared remarks on the conference call, CEO David Wickman laid it all out. He told us that UNH's earnings growth would likely come in at the low end of their 13 to 16% long-term forecast. Hey, maybe that sounds negative, but you have to consider that what Wall Street was looking for. The analysts, on average, expected UNH to generate 11% earnings growth in 2020. So compared to that management's 13% forecast, well, let's just say that's downright exuberant. And that is another reason why we had this nice upward move that was totally justified, even better. They addressed the sort of new tax everyone was fretting about, telling us the cost would be manageable. I felt great after I read the conference call. What about the other worries? Well, during the question and answer session, Jeff Putnam, he's the CFO of UnitedHealthcare, their managed care business. He told a compelling story about costs. He said, and I quote, "We continue to see costs very well controlled," end quote. In other words, they're not being torn apart by runaway healthcare inflation, as many thought would be the case. And that's how UNH's medical loss ratio held steady rather than deteriorating as the bears predicted. In short, UnitedHealth gave the bulls some much-needed ammunition. Hey, if you're focused on the next 12 months, this is a terrific business. But we know the biggest, baddest negative here has nothing to do with the fundamentals right now. It's all about the future, what drove the stock down this way until it bottomed. And what's that? Like I told you before, the real knock on this managed care industry is that the stocks will be eviscerated if Elizabeth Warren, Senator Warren, wins the Democratic primary. And the companies could be annihilated if she wins the general general election. UNH simply isn't compatible with her Medicare for all legislation that she'd like to get through. So why doesn't the prospect of single payer keep me away from this group? Warren got the front-runner treatment at last night's debate. The other candidates came in after her in force. She had by far the most amount of time. I thought it was like she was debating herself in the end. Doesn't that mean we need to take these fears seriously? Sure. I just think that they're already baked into the stock. I almost wanted a cake on set to give you the full impression here. Maybe they're more than baked in. Why do I say that? I consider the possibilities here. Let's say Warren wins. Can she pass Medicare for all? Speaker Nancy Pelosi has told me several times she's against it. Senate Minority Leader Chuck Schumer has said over and over again he's against it. Many of the other candidates on the debate stage last night were against it. They think the cost is prohibitive, and they're worried about the optics of taking away private insurance to replace it with a government plan. Warren, or Senator Sanders for that matter, would need to win a landslide victory. The landslide. The Democrats retaking the Senate, okay, this is all the things that have to happen, by a pretty wide margin before Medicare for all becomes a realistic scenario. Could it happen? I mean, anything's possible, right? But is it likely? Let me put it this way. When President Obama had a 60-seat supermajority in the Senate, he couldn't even pass a public option where the government would have offered competing plans on the ACA exchanges. Even if the Democrats win every competitive Senate race, every one next year, they'll only have 54. You can't pass this kind of sweeping legislation with such a slim majority, especially when your own party is divided on the issue. The Speaker of the House doesn't want it to happen. But look at it this way. What happens if Warren doesn't win? What if Biden takes the nomination? Then these single-payer worries go away, and UNH should be able to trade at, get this, I'd say maybe as much as 20 times earnings, which would send the stock back to $330, up more than 90 points from here. What if Trump gets reelected? Same thing. Even if Warren wins, it's an ordinary victory, not a landslide. You can take the existential crisis scenario off the table for the managed care stocks. Bottom line, the whole health insurance space came down too far, too fast. So when UnitedHealth delivered a fantastic quarter, great guidance, its stock roared back. I think it is still way too cheap versus historical level to ignore. And the political risk has already been baked into the share price, which means the UNH, even after yesterday's magnificent romp, is still a buy. Stacy in Florida. Stacy.
Hi there. How are you?
I'm doing well, Stacy. How about you?
Wonderful, wonderful. Well, I am a registered nurse,
okay.
And I'll tell you, you performed a mitzvah and don't even know better. You helped me to get to the point where I can retire before retirement time. And it all has to do with the things that you say. But there was one stock that really powered through quite a bit, and it's called Aflac.
Sure.
And I don't know if you remember, but you were kind of clowning around and had your face almost to the camera lens. And you said something like, buy it, or if you don't buy it, you're going to be sorry. Well, let me tell you what that stock did. Not only did I double it, not only did I triple it, but I quadrupled it, then I sold it. All at a profit. Let me tell you something. My burning question to you right now, and I'm a travel nurse, I save lives coast to coast, but you're saving my financial life, I got to tell you, because you made me a millionaire at the age of 55.
Oh,
I'm not kidding you. On a nurse's salary, I must tell you. Okay, forgetting about all that, is Aflac again a buy?
No, I don't want you to go back to it. We had a real good run. I think it's okay. I really prefer the managed care stocks, the traditional ones, something like UnitedHealthcare, which is much cheaper than AFL. I am so grateful for your comments. So grateful. I mean, look, I had to go through this long period where people said I was a clown. You know, like 30 years. 30 years worth of being. I was at my 45th reunion. People were saying, hey, look at him. He was a clown then. But you make me feel like a happy clown, if that's the way you want to call it, or maybe just someone who did a good job, and I really appreciate it. Okay, the managed care stocks have been in the doghouse. Until yesterday, they've been sprung. When it comes to UNH, the risk, I think it's baked in. It's a buy. Stay with me.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.